Good evening, everyone, and welcome to our first ever client webinar presented by the Graves Financial Advisory Group. We would like to thank you very much for taking the time out of your evenings to join us. We hope you find the session useful. We would also like to thank you very much for your patience, as we can guarantee there will be some technical difficulties. My name is Jonathan Graves, and I will be your host for this evening. The picture featured here on the slideshow is of both my father, Dennis, and I, as we had planned to co-present. Long way to say, here's what the team looks like as of today. We're very happy with where everything sits. We have what we feel is a very competent team, and we look forward to servicing you the exact same way you're used to, and we look forward to formally introducing you to Kathy, Joe, and Joanne as things come back to normal. So this was supposed to be Dennis's slide, but I'll do my best to give it some justice. So a little update on the economy and stock market. So 2021 Q1, which is quarter one earnings, quarter one being January, February, March. And basically what everyone kind of focuses around earnings are analysts, they're called, come out with expectations of where they think companies' revenues and profits will come in based on their projections. And then after the companies actually release their earnings reports, based on how projected the companies were going to do versus how they actually did, usually gives us some insight. As you know, this is a bit of a function of what's going on in the economy, where things are in the reopening with the pandemic, et cetera. But 2021 Q1 earnings, which has some easy comparisons with 2020, just because the pandemic was beginning to show its impacts in the economy. But earnings or profits were up on average, and I'm not quoting to the end of earnings season because we're still in it. But so on to some planning wrinkles. The first one that Dennis wanted to touch on was beneficiaries. I just wanted to really reiterate that you should revisit and update your beneficiaries fairly frequently as your situation changes. One piece that we did really like to mention is that in the event of marriage, remarriage, or marriage breakdown, currently in Nova Scotia and in all the Atlantic provinces as of today. Now it has kind of started to change in other provinces across Canada, but family RRSPs. So again, we basically wanted to pick 3 or 4 wrinkle topics that could apply to anyone. It just depends on, if you're a younger family, a family RRSP is more pertinent to you. If you're someone who's considering naming beneficiaries and what happens as your assets pass to the next generation, that last slide was more kind of directed towards you. And our DSPs is to raise awareness for people that qualify for the disability tax credit. And then finally is the CBO, which is for our small business owner clients. But I digress. I'll get into that in a second. So family RRSPs is essentially a normal RRSP, but you can, as you have more children or grandchildren, you can add them onto the existing plan. So there will be one plan, but let's take a family that has 3 children. There would be one family RRSP, but there would be 3 beneficiaries. So the nice thing is, whenever you make contributions to a plan, an RRSP, contributions attract grant. So again, it's subject to up to an annual maximum, $2,500 at 20% until the year in which the beneficiary turns 17. There is a catch-up allowance as well, that if you've never made contributions before, you can actually basically do 2 years instead of 1 that would attract grant. And like I said, you can add new children to your existing plan. And you can invest in shares inside your RRSP, the exact same as you would invest your tax-free savings account, your RRSP, your corporate account, et cetera. Again, so they're used more of as a retirement supplement plan. In order to have all your grants vest, which is the government portion, you you can't really withdraw any funds until the beneficiary reaches age 60. So you should kind of treat an RDSP the same as an RRSP in that outside of extenuating circumstances, it should be used for retirement age clients mainly. So the contribution or the grant amount is based on family income. So let's say you have a child that qualifies for the disability tax credit. The amount of grant that that child or that child's plan would receive is based on your family income. So family or personal income less than $98,000 attracts a much more attractive grant than for families that earn more than $98,000 of family income. After the disabled person turns 19, the grants are actually based on their own personal income or their family income with their spouse. So for families or personal income less than $98,000, $1,500 in annual contributions attracts $3,500 of grant, and this is annually. Now, if someone has qualified for the disability tax credit in the past but has never opened up an RDSP, you can backdate the contributions of the plans for up to 10 years, which is a really attractive feature as well. And finally, contributions that attract grant can be made until age 49, and contributions that don't attract grant can be made till age 59. More about it. Here's a little break. All right, and that concludes the formal part of the presentation. 34 minutes. Again, we're hoping to do these in about, our end game is about 40 minutes. We're hoping to have them done by. You're all very busy, and if we drone on any more than that, we're doing it more for us than for you. That concludes it. Again, sorry about the technology issues we had. We're kind of pioneering this a little bit with the live event. We're the first team in Gundy to try it. So again, it comes with its hiccups for sure. I know some of you had issues getting on, and for that I apologize. But again, we just wanted to thank you very much for taking the time. We hope you found some value in this. We welcome any feedback that you have, so if you want to send us an email with a little bit of feedback, that would be fantastic and greatly appreciated. And hopefully we'll have the replay available for you to be able to view or send to a loved one or family member you think might benefit from some of the information in it. And again, reach out to us if there was anything in the presentation you found you felt related to your financial situation and you want to know more. So with that, I'm going to end it for the night. Just wanted to say thank you very much again, and hope you're all staying safe, and we hope we see you all in person very soon again. Thank you.